Good morning. Today, Asia's financial markets tell a story of sharp contrasts. Japan and South Korea's stock markets are soaring, fueled by optimism in technology and innovation. Meanwhile, China's markets are stumbling, weighed down by concerns over its economic recovery. This split highlights how different economies in the same region can move in opposite directions, shaped by unique challenges. Japan and South Korea ride the global tech boom, while China faces domestic slowdowns, especially in manufacturing. We'll dive into what's driving these trends, from tech giants in Tokyo and Seoul to economic data out of Beijing. Plus, we'll see how global events, especially in the US, ripple across Asia. It's a compelling look at resilience, challenge, and the interconnected nature of today's global economy. Let's start our journey in Japan, a country where tradition and innovation blend seamlessly, and where the financial markets are currently making global headlines. The Nikkei 225, Japan's premier stock index, has just surged to an all-time record high, leaping 2.1% in a single day to soar past the 52,000-point mark, a milestone that has captured the attention of investors worldwide. This remarkable rally caps off a truly spectacular month for Japanese equities, with the Nikkei climbing more than 15% in October alone. The energy on the trading floors and in the streets is palpable, as optimism sweeps through the city. At the heart of this surge is Japan's dynamic tech sector. Semiconductor giants and cutting-edge AI companies are powering the market's ascent, driving innovation and growth at a pace rarely seen before. Adding to the momentum, strong earnings reports from major U.S. tech firms have sent positive signals across the Pacific, boosting confidence among Tokyo's investors and encouraging even more risk-taking. The optimism isn't limited to just technology stocks. The broader Topix index has also climbed, reflecting a wave of enthusiasm that's spreading to other sectors, from finance to manufacturing. Investors are increasingly convinced that Japanese corporations are well-positioned to capitalize on global trends, from digital transformation to green energy, and are adapting quickly to shifting economic landscapes. As records are broken, momentum builds. This attracts a fresh wave of investment, not just from local players, but also from international funds, eager to participate in Japan's resurgence. The result? Japan now stands out as one of the world's best-performing markets this year, drawing attention from analysts and investors across the globe. This virtuous cycle of positive news and rising prices is creating a self-reinforcing rally, as confidence feeds on itself and more capital flows in. For now, Japan's market is the undisputed star of Asia, shining with renewed strength, innovation, and a sense of possibility that's inspiring both seasoned investors and newcomers alike. To understand Japan's rally, let's look at the economic backdrop. Tokyo's core consumer price index rose 2.8% in October, higher than expected, signaling persistent inflation. This shift away from deflation is significant, but it puts pressure on the Bank of Japan to consider raising rates. The central bank is holding steady for now, waiting for stronger wage growth. Industrial output jumped 2.2% in September, beating forecasts and showing manufacturing strength. This aligns with the stock market's surge. Real economic output is backing up investor optimism. However, consumer spending remains fragile, with retail sales up just 0.5% year-on-year. Higher prices may be pinching household budgets. The mix of strong production, steady inflation, and cautious consumers creates a complex but positive outlook. It's this narrative that's fueling confidence in Japan's future. Now to South Korea, where the KOSPI index is also on a tear, up nearly 20% for October. This remarkable rally has caught the attention of investors worldwide, as the country's stock market outpaces many of its global peers. The surge is not just a number. It's a reflection of South Korea's growing influence in the world of technology and finance. The surge is driven by the semiconductor industry. Giants like Samsung and SK Hynix are leading the way. These companies are not only household names in South Korea, but they are also recognized as global powerhouses, setting the pace for innovation and production in the chip sector. These companies are crucial to the global tech supply chain, making chips for everything from AI to smartphones. Their advanced memory and logic chips are the backbone of modern electronics, powering devices and systems that billions of people rely on every day, from cloud computing servers to electric vehicles. Strong U.S. tech earnings have boosted sentiment, as South Korean firms supply many American giants. When companies like Apple, Nvidia, and Google report strong results, it often signals more orders for Korean chipmakers, creating a ripple effect that energizes the entire market. Investors are betting on continued high demand for advanced chips. With the rise of artificial intelligence, 5G networks, and the Internet of Things, the need for faster, more efficient semiconductors is only growing. This optimism is fueling a wave of investment and speculation in the sector. South Korea's expertise in semiconductors is powering its markets, despite broader economic challenges. Even as global growth slows and trade tensions persist, the country's focus on research, development, and manufacturing excellence keeps it at the forefront of the industry. The tech rally highlights the country's vital role in the digital age. South Korea is not just keeping up, it's setting trends, shaping the future of how we connect, work, and live. While there are risks, the dominance of its chipmakers is a major tailwind. Global competition, supply chain disruptions, and shifting demand are always concerns, but South Korea's leadership in advanced chip technology gives it a strong advantage. The KOSPI's rise is a testament to the value of innovation. It shows how investing in technology and talent can transform a nation's economy and global standing. South Korea's market is thriving on the world's insatiable appetite for technology. As the digital revolution accelerates, the country's chipmakers are poised to remain at the heart of global progress, driving growth and shaping the future for years to come. In contrast, China and Hong Kong's markets are struggling. The Shanghai and CSI 300 indexes fell, continuing a downward trend driven by doubts about China's recovery. The latest data shows manufacturing contracted for the 7th straight month, a major warning sign. Services growth remains weak, failing to offset industrial slowdown. Despite government efforts, the economy hasn't found firm footing, leaving investors anxious. Many now expect Beijing to introduce stronger stimulus measures. Until then, caution will likely dominate Chinese markets. Beyond the big three, other Asia-Pacific markets are charting their own paths. Australia's ASX 200 edged up 0.3%, reflecting cautious optimism tied to commodity prices and China's health. Singapore's Straits Times Index dipped slightly, mirroring global uncertainty. India's Nifty 50 futures pointed lower, as global trends and domestic factors like inflation weigh on sentiment. Each market responds to its own mix of local and international forces. There's no single Asian market. Each country has its own story. Global tech trends and China's slowdown have broad impact, but local dynamics matter. The region's financial landscape is as diverse as its economies. Events in the US have a powerful impact on Asian markets, often in ways that are both immediate and far-reaching. The financial heartbeat of Wall Street doesn't just set the pace for America, it echoes across continents, shaping the mood and momentum of markets thousands of miles away. Wall Street's moves often set the tone for trading in Tokyo, Seoul, and Hong Kong. When the opening bell rings in New York, investors in Asia are already preparing for how those developments will affect their own trading day. The influence is so strong that a single headline from Wall Street can shift billions of dollars in Asian markets overnight. Last night, US stocks fell on worries about AI costs, sending a wave of caution through global investors. Concerns about the future of technology spending and the impact on major companies led to a sharp sell-off, with traders anxiously watching for any sign of stability. But futures rebounded after strong Apple and Amazon earnings. These tech giants reported better than expected results, restoring confidence and sparking a rally in after-hours trading. The positive news quickly spread, reversing earlier losses and setting a new tone for global markets. This turnaround sent a wave of optimism through Asian tech stocks. Investors in Tokyo and Seoul responded swiftly, with tech shares surging as confidence in the sector was restored. The ripple effect was clear. What happens in the US can quickly change the outlook for Asia's biggest companies. The Nikkei and KOSPI rallies were fueled by confidence in global tech demand. Investors saw the strong US earnings as a sign that technology spending would remain robust, driving growth not just in America, but across Asia's interconnected economies. Sentiment travels quickly across time zones. Good news in the US lifts Asia, and vice versa. The global financial system is a 24-hour relay, with each region passing the baton of optimism or caution as markets open and close. The financial system is tightly connected. Shocks in one region ripple worldwide. A sudden change in US interest rates, a major corporate announcement, or a geopolitical event can all trigger reactions in Asia within hours, highlighting just how interdependent today's markets have become. For investors, watching Wall Street is essential to understanding Asia's daily moves. Market participants rely on overnight cues from the US to make informed decisions, adjust strategies, and anticipate potential risks or opportunities. The interplay between US and Asian markets shapes investment decisions, driving everything from currency trades to tech stock valuations. This dynamic relationship means that no market operates in isolation. Each is part of a larger, ever-shifting puzzle. It's a global web. Every action has a reaction. The flow of information, capital, and sentiment binds markets together, making it crucial for investors to stay alert to developments around the world. Staying informed on both sides is key to navigating today's markets. In a world where news travels instantly and markets move in sync, understanding the global picture is more important than ever for anyone looking to succeed in finance. Beyond earnings and data, US-China relations cast a long shadow over Asian markets. Recent high-level talks between President Trump and President Xi were described as positive, but lacked concrete agreements. Investors want real policy changes, not just optimistic rhetoric. The absence of clear outcomes on tariffs or tech trade leaves markets in limbo. Geopolitical tensions between the US and China remain a top risk for the global economy. This relationship affects supply chains and trade flows across Asia. Investors will keep scrutinizing every move from Washington and Beijing. Until stability returns, uncertainty will linger over Asian markets. Stepping back, what does this divergence in Asian markets reveal? Japan and South Korea's tech-driven rallies show the power of innovation and adaptation. China's struggles highlight the challenges of economic transition and the importance of policy support. Asia is not a monolith. Each country faces unique opportunities and risks. Understanding these differences is crucial for investors and policymakers alike. The rise of one market and the fall of another signal a realignment of economic power. Watching these trends will be key to understanding Asia's and the world's future. The region's story is one of change, challenge, and opportunity. We'll be following it closely.